Morning, everybody. I just got back from Indianapolis, Indiana, and I would like to say, gentlemen, start your engines, but I'm going to say go Raptors because I'm wearing my Raptors hat for the presentation today. And my name is Dennis Brumley. I'm here along with Mark Denney. We work with Grand River, Bridgeforest Grand River, and we're broadcasting from Guelph, Ontario today. So hopefully this is going to be a good morning for everybody and learn lots of things. So I want to give you a little background. Mark and I have been working together on presentations. Our first time we did this was for a special Bridgeforce meeting that we had on August 28th, 2019 to celebrate our 15 years of doing Grand River Tuesdays. And we invited 13 of our insurance companies to come, and 13 marketing reps came, and we went over what we call Bridgeforce Company hotspots. And we'd like to share those with you today. We recently did this to a group in March. So it's been updated, so you're going to get the up-to-date information. We're going to plan on doing this every 6 months, updating it and making it available. So after the presentation, this is being recorded, so you can hear it later on or pass it on to a Bridgeforce broker to share with them. Also, if you have some questions, you can. We're going to take questions at the end of the presentation, and you can pass them along, and we want to. So we can take them at the end, okay? So we want to thank Cassie and Jinky from Bridgeforce Marketing for helping us put this together today and for getting us on track. So we're going to look at 13 companies today, and the ones we're going to look at are BMO, Canada Life, CPP, Desjardins, Empire, Equitable, Foresters, Industrial Alliance, Avari, Manulife, RBC, SSQ, and Sun Life. The ones we won't be looking at are Assumption Life, Blue Cross, Humana, La Capitale, and Union Mutual. Those are all very good companies, but we just don't do that much business with them, so we're not going to be looking at them today. So, but most brokers deal with 3 to 5 companies, so hopefully the 3 to 5 that you deal with are going to be the ones that we go over. So our objectives today is help you develop a better relationship with Bridgeforce, with the companies that you do business with, a better relationship with your company marketing reps, which we might mention our reps from time to time, but you will go to your company reps for more information. Better understanding of where companies shine in the marketplace and who to look at for certain situations. Because when we put this together, we went to the companies and say, where do you think you shine? And some companies felt they shone in a lot of areas, and other companies felt that they were real good in other areas. So it's kind of a blend, but each company has a few niches that you need to take note of. So what to look for in a carrier on your first slide here. A company that has a good reputation and is stable, and that's all the ones that we deal with. A company with a good selection of products and competitive rates. And when you look at Life Guide, when you look at it, you know how competitive the products are for the companies. You want products that are flexible, that you can grow with your clients and have some options. If you're doing term, you want to look at term switches. Most companies are 5 to 7 years there. Term products that can be converted to permanent products. That's very important when you're looking at a plan. A CI that has a switch can be switched to longer terms or conversions. You want to deal with a carrier that you feel good about, and you want to support a carrier that's going to help you build your business. And working with the wholesalers, they'll help you build your business. So we're going to get going here. So Mark and I are going to pass the headphones back and forth. We did have 2 sets, but for some reason that we're having some glitches on that. So Mark's going to start off with BMO.
So BMO has a large group of products. They have a new whole life plan that's been in place now for a few years. Very high guarantee cash values, 10, 20 life pay contracts. On their UL, very good level cost of insurance. When we're running Life Guide on a regular basis from ages kind of 60 plus, BMO is showing up very well and are clearly a larger case player. They're looking for the larger contracts out there. They likely have one of the most robust fund portfolios for ULs. I think at one point in time, they had close to 350 funds. I think they've trimmed that back a little bit to about 300, but there is still more than enough funds in their offering to find what you're looking for. One of the interesting things about BMO is they will use age ratings instead of percentage ratings on rated cases. And what I have found in the recent past is, find out what one of the other carriers is possibly rating your client, and then go and talk to BMO. In some cases, because they're viewing the rating differently, it will end up at times be a savings for your client. So because of the way they do their ratings, you do need to look at them on rated cases just to see what they can offer you. As I said, they are focused on larger cases, larger face amounts, very competitive term, T10, 15, 20, 25, and 30. Very competitive rates. They still have a term 100 product. On the CI side, they have T10, T20, T75, T100, and an enhanced 15 pay to 100 contract. So a very, very good carrier. This is the old AIG company in Canada. If you're not looking at BMO on your larger cases, you maybe should. I've had some very good results in underwriting with BMO, and they're definitely here to work with you on the larger cases, and they definitely want to be a partner with you in your business. Next company, we're going to flip over. We're going to take a look at Canada Life. So Canada Life, been a player, mainstay in the Canadian market for many, many years. They have very good whole life insurance options. They have both the wealth and the estate contracts. So if you're looking for early cash value contracts, they have that, and then obviously they have the estate side. So that's really where you're getting your value at the end, at life expectancy. They have likely the best priced 10 pay UL contract right now in the marketplace. With the 10 pay UL contracts, basically it's either premium or cash value. It's a compromise between the two. They're a little lower on the premium, but a little lower on the guaranteed cash values as well. But if you have a client that's just looking for a 10 pay level death benefit contract, the Canada Life contract is likely going to be the one you end up looking at because of the pricing in the marketplace. But they also have 15 pay and 20 pay options too if you're looking for those. Astra, many of us will know the Astra program. This is a rate reduction table waiving program for permanent cases. Canada has been very aggressive in the marketplace on the underwriting side for many years, and certainly if you're dealing with a rated case, you need to take a look at Canada to see what they would offer under the rate reduction plan. Very well priced term. They have the longest switch option in the industry. They are currently at 7 years. Most of the companies out there allow you to switch from T10 to T20 in the first 5 years. So with Canada, you've got an extra 2 years to play with, and certainly something to take a look at if this is part of your plan. We have many advisors that will start with T10, flip it to T20 or a longer term, 5 years, or in this case, we can do it 7 years down the road and make it all part of the plan. It's all discussed and set up at the beginning. They have great UL conversion options, both level cost of insurance and YRT contracts. When I take a look at my favorite carriers for putting larger face amount term plans, larger business cases, Canada is one of the companies that I look at, because if we run into a rewrite issue down the road, so let's say it's a business situation, we only have T10 and the insured at this point in time is now uninsurable, what can you do? And if you only need that coverage for a short period of time, Canada Life will allow you to convert that term insurance to minimum premium YRT UL. You can pay the bare minimum premium on that contract, and it typically ends up being much, much less expensive than the renewal on the term plan, and it gives you some flexibility. Renewable term inside the UL contract, if the client decides that they do want to keep some of that coverage down. So of my six, I certainly recommend for larger face amount term, simply due to flex. Pre-underwriting assessments, this is somewhat contingent. The carriers out there are pre-underwriting. We use the pre-underwriting. basically have a conversation with a client, find out what their medical condition is, go to the marketplace, find out what the carriers are offering. So Canada is one of the carriers that still offers this service. We have a great relationship with the and he helps us out in basis in position are going to be rated, and they know what the rating. A much simpler case to close when the actual rating comes down in the final contract. DI, Canada Life is one of the major DI players still. When I'm looking at quoting DI, there's a lot of Canada Life, there's a lot of RBC, and then Manu as well. But most of the cases you see these days on the DI side. Benefit, this is very unique in the industry. I don't believe any of the other carriers have a lifetime benefit. Canada Life still has a return of premium rider, so 50% every 7 years with no claims. On the CI side, they have a very flexible, numerous conversion options for the T10, T20 coverage. Again, when it comes to critical illness, I look at trying to place as close to the proper amount of coverage as we can on the individual in question. You do have to get them at a younger age in order to be able to get them through underwriting typically. So when cost becomes an issue, sell them T10 for the proper face amount. And most of the carriers, certainly Canada Life is one of them, they give you switch options so that when money becomes available later due to higher income, etc., then you can look at switching that T10, T20 to something more permanent and with return or premium if that's what your client is looking for. So the main thing is get the coverage, the proper amount of coverage on CI in place on a younger client, worry about paying for it later. And then their lifetime CI can also go paid up or reduce paid up. So that gives you some options there. If a client decides that they're done paying for their CI coverage, they can take a reduced paid up option. So that's a fairly unique option in the industry, and certainly something to take a look at. So if your client decides they don't want to make any more premium payments, they can take a reduced paid up contract and have that coverage in place for life. All right, I'm going to hand it over to Dennis. He's going to talk about CPP.
Thank you, Mark. Before we move on to CPP, I'd just like to backtrack a minute and talk about pre-underwriting assessments. This is something, like Mark mentioned, that we preach basically with our brokers, and Canada Life, CPP, Equitable, Foresters, Industrial Alliance still do them. So we're fortunate that, and we have a pre-underwriting assessment form, which I can have Cassie and Jinky send out to you, show you what we use, because I would suggest, highly recommend that you use this if you aren't using it now. For example, I'm sure a lot of you heard of New Business Now from Canada Life. When that came out, things kind of went sideways. We sent out pre-underwriting assessment forms, and I found out Dr. Bruce, the medical director, was replying to these. So we developed a relationship with him over the time, and he's been very helpful, like Mark said, to us on cases. A lot of times we're using the pre-underwriting assessment forms as a close, and that we send them out to 5 companies. They come back and we say, well, here's what Dr. Bruce, the medical director of Canada Life, says regarding your situation. How would you like to proceed? And so we're using it as a close now, finding it very effective in helping us get some cases. So I would suggest, if you aren't using it, that you do take a look at using it. So our next company is Canada Protection Plan. And we do send out pre-underwriting assessments to them as well. So you're getting the regular carrier assessments and you're getting CPP assessments. Since they took off that decline question, it's opened up a whole new market there. So we can go up to 500,000 non-medical. But one thing we do highly recommend is that you not go beyond Section D, because we've had people go to Section D, everything was fine, they decided to go further, and instead of getting 500,000 term 20, they ended up with a 25,000 deferred life offer. So you can't go too far in those applications. So you got to be real careful about that. So there's no decline to postpone or rated questions on the application now, which is opened up things. No disability questions, no hazardous sports or avocation restrictions. We had a guy that drove a race car, and everybody wanted to rate him to the gills. and we looked at CPP, and they didn't have that on there, and he actually got a very good offer, half the price for what he was going to get from somebody else. So that paid off that way. And like I said, these pre-underwriting assessments forms, we can send them in, or you have direct access to a field underwriter, to an underwriter, Monday through Friday until 8 p.m. Nobody else does that, so that's a good thing. They have a e-app now for face-to-face or non-face-to-face. A lot of our newer brokers have adapted these e-apps, and they're finding it very easy to do business with people, especially in these difficult situations. With CPP, you don't have to take a check for the first month. The first premium starts the second month. The first month's on CPP, so that's a novel thing. The app is basically only 2 pages. So, but I would suggest that you get to know the app before you fill out your first CPP application. I have one in front of me. So just make sure that you get to know this application. And I call it the down and out app. You go as far as you can go. And as soon as you have a yes question, then you stop. Okay, so it's pretty, so basically you do the field underwriting with CPP. Paper apps, you can use paper apps, or you can use these e-apps. And you can scan them and you can send them in. They don't need the originals. They're one of a few companies every year that if you want to pay by credit card, you can do that. We're fortunate. We have a great field rep named Melanie McCallum. I think she deals with most of you. If you've been to a Bridgeforce presentation, she's the one that walks around the room and makes you feel uncomfortable. But Melanie knows her stuff, and Melanie is great on follow-up. She is one of what we call our elite wholesalers because she gives us such great help and support on cases. In fact, when she first became our CPP rep, she doubled our business in the first year. So she's very good. Also, too, if you Foresters does not own CPP. Let's clarify that. They have a relationship with CPP, and Foresters member benefits are part of all CPP plans. So if you sell a CPP plan, the Foresters benefits go along with that as well. And cigar smokers are non-smokers with CPP. I'm sure somebody's going to ask us a question about marijuana smoking at the end. Every company's a little different, so we have to address that with each specific company. So CPP's definitely one of our players. We always recommend that you go to our primary carriers first. If you can't find an offer from them, then you look at CPP, because CPP, a standard CPP policy is 150 to 175% mortality, okay? And their preferred and elite rates, they call them preferred and elites, but they aren't the same as the other companies. So you got to make sure you're aware of, when you're doing a comparison, you're comparing an apple with an apple. So the CPP does have a place, but like I said, we recommend you go to our primary carriers first, take a look at them, and then if you can't make a fit, then CPP is a good place to go. Okay? Mark's going to carry on, and we're moving on to Desjardins.
So Desjardins has arguably one of the largest product suites in the industry. When you take a look at all of the different products they offer, Desjardins, many of us know the name. They're certainly more prevalent in Ontario now that they bought out State Farm on the P&C side. We're seeing their name more and more, hearing their advertisements. They are a very large financial institution. I think they're ranked in the top 10 worldwide from a banking perspective. And they are still a Caisse Populaire, so it's like a mutual company from that perspective. So if you haven't looked at Desjardins recently, you should take a look at them now. They've made a lot of product advancements in the last few years. As I said, arguably one of the largest product suites in the industry. They've got a 10, 15, 20, a paid up at 65 and paid to 100 guaranteed whole life contract. That whole life contract shows very well when we're looking at cases on either a single life or a joint last to die. They will allow annual payments by credit card. They have a CI rider on those plans. It can be paid up at age or in 15 years or 20 pay and paid up at age 65. So something to look at if you're looking for a paid up CI rider. They have long-term care advance rider on their 20 pay plans. So basically, if you end up needing long-term care, you can draw against that particular plan. They have one of the most unique CI offerings in the marketplace right now. This has been on the market for about a year and a half now. They're offering T10, 20, 65, 75, and T100 in 10 pay and 20 pay contracts. They offer child CI as well. It's the only contract in Canada that covers all types of cancer, along with exclusive cardiovascular procedures. So there is no survival period for non-cardiovascular issues. So generally speaking, as we all know in the industry, you've got a 30-day wait before a CI claim becomes payable. I've personally had 3 situations in my 24 years where the clients did not survive that 30-day wait, and it ended up being a death claim payout instead of a CI claim payout. So 30 days doesn't sound like very long, but it can be an issue at times. So they also have return of premium on death. Minimum is a 25% of the face amount. It's not just return of premium. It's a minimum 25% of the face or more. Rate reduction program for rated CI cases. You'll find all of the Quebec-based carriers to be much more aggressive than what you would see with the other carriers in the rest of Canada. Quebec is obviously just the province of Quebec. There's a finite number of clients inside that province are fighting very hard for market share. They need to grow their market share outside of the borders of Quebec. So they are being very aggressive in their underwriting decisions and in they're really making business decisions on cases that might be viewed a little more difficult by some of the traditional carriers. So certainly if you're looking at a case that's not cut and dried, it's not a clean non-standard, take a look at your Quebec-based carriers. They all have table waiving programs, either formally or informally, and you might be quite surprised at what you'll receive for an offer coming out of those Quebec-based carriers. They have a hybrid insurance product. It has life CI and long-term care. They still have a T100 joint and single life based. Point of sale e-app, it's an instant issue product. Take a look at that if you deal in the electronic application world. And as we like to joke, we have the most persistent wholesaler in the industry, John Johnstone. So for any of you that have talked to John in the past, you know he's very passionate about the industry and in helping advisors grow their business. And if he can help you do that inside the Desjardins product, he will certainly do that. All right. Next, we're going to take a look at Empire Life. They have some very good whole life contracts. The Optimax Wealth, the Estate Max, so that's your wealth version, your estate version. Their 8-pay contract right now is likely the lowest priced short pay whole life contract in the industry. When you talk to Empire Life, they are quoting a lot of IFAs, the immediate finance arrangements. Generally speaking, that 8-pay contract, you usually have cash value equal to premiums paid by, say, year 10 to 14, depending on the age of the client. So for those individuals that are looking to put a contract in place and still have some flexibility from an exit strategy perspective, oftentimes that 8-pay contract will show better than anything else out there if you're looking to possibly collapse it and get your money back at the end. They have combination plans, life and CI together. From that perspective, you can save on some policy fees, create nice, simple, clean contracts, certainly in your mid-market for couples that are looking to have both life and CI, just have it all on one contract. They have T10, T20, T30, and T100 with values. The T100 with values, if you haven't looked at it recently, take a look at it. For a few dollars more on an annual basis, you can get a T100 contract, guaranteed premiums for life, and there's some values there. So again, to give the client some flexibility down the road if they need to change some things or if they need access to some money. All their term plans renew to age 100. This is a very interesting feature. So most term plans will expire at a certain age down the road, whether that be 70, 75, 80. Some plans go to 85. But with Empire's plans, there will come a time at which they'll actually flip to a YRT contract, or it's actually a T100 contract. And there is coverage in place You have to pay the premium, but there's coverage in place until age 100. So certainly something to take a look at if you're dealing in those markets where you're not exactly sure how long they're going to want the term. You've always got some options with Empire Life's term, which is nice. Arguably one of the best e-apps in the industry. When you talk to Empire, they actually say it's more like 60% of their life insurance apps come in via the electronic system. And most of that is likely due to the fact that they are paying advisors more comp to submit the case on an electronic basis. So they're one of the few carriers that are doing that. You know, you're making about 10% more comp if you're using their e-app system. And the e-app system is very good. So it's really not a hardship on our part to use their e-app system. If you haven't looked at it, take a look at it. And the inside wholesalers at Empire are all very well versed on that e-app process. If you needed to talk to somebody quickly about that, then call your inside wholesaler and they can walk you through that process. If you're still doing paper-based, they will actually take a fax scan of a paper app. They do not need the original either. So for those of us that are maybe a little more remote or in different places, I mean, in this day and age, to be shipping paper around seems a little bit crazy. And they will actually do everything electronically with no original signature, which is nice to see. They have VIP underwriting on cases of $25,000 a year premium or $5 million a face. I've had advisors that have gone through that process, and they are very well looked after. They're kept up to date as to what's happening in the underwriting process. And from all accounts, they've said that they've been very happy with the service that they've been receiving from Empire Life. Empire also does personal history interviews if you don't want to ask the medical questions. A lot of carriers are doing tele-interviews now if you don't want to ask the medical questions. So Empire is another company that will be able to accommodate that and make your life a little bit simpler. So for the next section, we had a little bit on Empire Life Investments. We're going to skip that for today. We'll maybe save that for another presentation. Now I'm going to hand the microphone over to Dennis. Dennis is going to talk a little bit about Equitable Life right now.
So Mark and I are kind of tag teaming today, but just so you know, Mark and I both have been in the industry a little while, over 20 years, and most of that all has been in the brokerage side. So we've gotten to know the brokerage side because there is a difference between the career side and the brokerage side, as most of you already know. So Equilife, they're one of the last of the Mohicans, as I call them, because they're about the only mutually owned life insurance company left in Canada. At one time, everybody was mutually owned, and gradually it's gone to the other direction, to shareholder driven. So they are owned by the policyholders, and they are one of the easier companies to do business with because they're a mid-sized company, and they're a good company located in Waterloo, Ontario. So you can fax or scan apps to your case coordinators. You don't have to have the originals. They used to have one of the smallest apps in the industry, a short app, but we don't have that anymore, but that was a good thing. A very good mid-market company. Right now, one of the best, if not the best, whole life company for whole life products. Most of the larger cases that we're working on, everybody looks at Equilife on the estate and wealth side, and Mark does a lot of work on the advanced marketing side, and he's looking at a lot of nice cases with Equilife these days with some nice premiums. Probably one of the best juvenile whole life plans in the industry. We have, like, what we want you to try to do through this presentation is when a situation comes up, we want you to think, oh, bingo, Equilife would be good for that, or Forces would be good for that, or Manulife would be good for that. So we want you to kind of think. So I would suggest that you take this presentation and you put it in your presentation or sales kit so you have it as a reference, especially for you newer brokers out there, so that when you're going to see a client, you're thinking about what companies they might want to deal with. Go over this and know what a company's good at. So because clients will tell you what they want if we listen close enough. This is my sales skills part of the presentation, but we got to listen for it. So, but they're very good. Equilife is very good in the juvenile market for whole life plans, especially the whole life 20 pay. very good on that. Equal is a company also does pre-running assessments, and we use these a lot to position companies with Equitable Life. So when you do pre-running assessment, you're basically giving the client a kind of the company's going to do an evaluation of their health and say, here's what we think, so the client price, providing the information is proper and got some good term plans. And you can convert to UL or whole life. Some companies have limited options for that, but they have a good option there. They have a partial term conversion program, so that if you want to say that client has 500,000 and they want to convert to permanent insurance, they can convert 250 to permanent insurance and carry over the balance of the 250 term at current rates. Okay, they're not going to underwrite at current rates. So that's only one other company, basically Manulife, does that, and Mark will talk about that a little later. And also, Equilife has put together a good estate and tax planning team for those larger cases, especially because they're more into the whole life market these days, and we're getting some very large cases working with the estate and tax planning team. So Equilife, very good company. We get very good support from them. So if you're not doing with Equitable, I suggest that you take a look at it. As Mark said, we got some investments here. We do have one of the in fact, we deal with the top Equilife investment wholesalers in the company. Tracy Heath, she's done that 2 years in a row, so she's very good. So if you're a Grand River broker, that's who we're going to refer you to for investments. Foresters Financial. You've probably all seen or met the face of Foresters. David Hutchison, or I could say the face of the Raptors, the Maple Leafs, or the Toronto Blue Jays. If you've gone to any sporting event in Toronto, you've most likely seen David's face of that sporting event, because to me, he's Toronto's #1 sports fan. So Foresters is the fraternal society in the brokerage market, but you wouldn't know it. They're set up a little differently, kind of like a mutual company, but a little differently. They have members, they call them. So whenever you buy a policy, you become a member of the company. Very, very community oriented. They do playground builds all over Canada, and they usually do a couple each year. And if that's something that you would like to participate in, many Bridgeforce brokers have participated in those and build them in Toronto and Hamilton. So that's a special event. But they're specialized in the family market. That's their niche. And you can fax and scan their applications that some of our new brokers are using, and do pre-underwriting assessments, and we use them all the time in pre-underwriting assessments. And as a result, we did our most apps in Grand River with Foresters last year, and I attribute a lot of that to the pre-underwriting assessments. And also, all our new brokers are contract for Foresters for the first 2 years. Flexible hold, one of the best in the industry. Is a very good enhancement option on it, which is very lucrative, and it's 10-20 in life pay. So, and they have this incentive smokers program for people in the first 2 years, plus and non-par whole life, which, so basically, if they quit smoking within the first 2 years, then they continue that way. If not, it goes back to smoker rates as of the original issue date. So they have a special paid-up option on their Life-Term Care 375 plan that looks good. They have their non-par whole life, similar to a T100 product, is a very good joint last to die. They look very good on that. They do term layering. They have T10, they have T20 and T30, and they have, within the first 5 years, you can do the switch option. They have some through their benefit program. The industry's changed to a new way of accessing industry called LICAT, and it used to be called MCSSR. It's now called LICAT. They want to have one of the highest, if not the highest, in the industry. And like I mentioned, we get great field support from our marketing rep, David Hutchison, but the other marketing reps for Foresters are also very good as well. So we that's a company that Foresters is one that we really enjoy doing business with. And they want to work with us. Okay, next we're going to move on to Industrial Alliance. Once I move the screen here. Okay, Industrial Alliance, we've developed a better relationship with them in the last few years. And they have a broker bonusing program based on the volume of business that you do, which is very helpful. So we found that very helpful. They have a specialty whole life products in long-term care and child life and CI involved. They have simplified issue products. They were one of the first ones to have simplified issue products years ago. I remember that they were about the only one that did. But the one thing that really stands out with them is this superior risk tolerance program. And basically, it's a rate reduction program for permanent and term insurance products. It's important that you remember it's for permanent and term. And what it means is if you have a client that would be rated, say, 150 or 200%, they'll move them into standard. I'll give you an example. Young couple I did a pre-underwriting assessment. She had a weight issue and he had a health issue. They were young, in their 30s. I did pre-underwriting assessments with all the companies. Everybody was going to position them at 200% mortality, which is 100% rating. I sent it to Industrial Alliance. They issued them standard. So basically, they got their insurance for half price, as opposed to any other place I'd put. Any other place I'd put it, it would have been at 200% mortality. I had a business person that I was concerned about, so I sent it to IA, and they gave him preferred, 63-year-old preferred with them. So you never can tell what's going to happen, but if you have anybody that has health issues, take a look at Industrial Alliance. Under that superior risk tolerance program, you might be able to do something. And they're one of the companies that we do send pre-underwriting assessments to. They do have a large build chart. They've downsized it a bit. It's a little different than it was. It used to be the biggest in the industry. I mean, if you had somebody as big as a house, you could get them standard with Industrial Alliance, but they've downsized a bit. It's more based on ages now. So you have to take a look at that now to see where your clients fit in. They do these pre-underwriting assessments, and like I said, we send them out, and we've got some good underwriting decisions from them. Flexible CI products, they're available. And this can be life, CI, DIs. You can switch to do the switches in the first 5 years, and they have a 13-month policy with replacement without medical evidence. So Industrial Alliance, one of the companies that we've made some strides with, and we look forward to doing business with them in the future. So Mark's going to carry on here with Avari.
So Avari is a great mid-market company, and know that they are actually a pension plan, but this is certainly something that Avari themselves don't really promote. I think from a marketing perspective, one could actually argue that's a positive thing in the mid-market. I mean, we're helping our own Canada pension plan if you wanted to promote the company. They're very well priced on the level cost of insurance in the mid-market under age 40. Generally speaking, if you're looking at a min-funded level COI contract, for many, many years, Avari was just the first place you'd look because they always had the least expensive cost of insurance, and that really hasn't changed. Once you go north of 40 now, you've got some other players in the marketplace, but certainly under 40 for level cost of insurance, if you're just looking for a min-funded contract, Avari is likely the place you're going to take a look at. Avari's big claim to fame is their layering and combined banding. So they're giving you discounts on cost of insurance, and it's not by layer like what some of the carriers out there will do. So they'll look at it from a big picture. They take all of the coverage, put it together, and they'll give you the band rate, the cost of insurance per thousand rate for the total overall amount, whether you've got a layer of T10, a layer of T20, and a layer of T30. So very flexible from that perspective. Life Guide and CompuLife do not properly show Avari. So if you're using Life Guide to sell term and you're dealing with a husband-wife couple and some children, you really do need to go and actually run those numbers through the Avari software to see what the true price would be. The problem is that it's just their banding ends up being too complicated for some of the comparison companies out there to be able to put it together. So I always use LifeGuide for my to go into the carrier software to run, just because you can actually sometimes your life is showing you. They have very aggressive preferred underwriting. When you take a look at it, you have very high chances of getting a preferred basis when you underwrite at Avari. And for those individuals, I mean, clients know now that if they are in excellent health, they can do better than normal prices, better than standard prices. And Avari is certainly one of the carriers that you're going to be looking at on if you're looking for preferred underwriting specifically. Avari is a very liberal bill chart, and since Industrial Alliance revised their bill chart, I would have said IA, like Dennis said, was the largest bill chart in the industry. Since they've revamped theirs, I suspect that Avari's is likely the biggest, most liberal bill chart out there right now. So take a look at that for those clients that might be a little bigger for their height. You've got a much higher chance of getting a standard offer through Avari than some of the other carriers out there. Up to a 15% savings when adding CI riders to life products. So that's versus the standalone product. They will give you a discount when you're adding it to a life insurance plan. So being able to put all of it on one plan with no additional policy fees can save clients in the mid-market area a lot of money over time, certainly. And then they have a term 30 contract with a special option. It can be adjusted. It's a very interesting rider. If you've never looked at it before, talk to your Avari wholesaler, and it can be quite useful in our marketplace when we're looking longer term. From my perspective, whenever I'm looking at any of the products, flexibility is always my key requirement, and certainly Avari has a lot of flexibility inside their term plans. So Avari is another one of the carriers that's in my top 6 term life carrier options, simply from the standpoint of the flexibility and converting that term to something else later down the road, and the flexibility inside the actual term layers themselves. My insurance view, this is a needs analysis tool that will actually help you layer different terms of insurance into a client's plan and show the client in a nice, clean, crisp client presentation what that's going to look like. Many of the carriers are offering, and certainly Avari, is you have the ability to structure a 30-plus year plan and never have to submit the client to medical evidence again. So as medical advancements improve, I mean, we're all living longer and all of that's great, but that doesn't necessarily mean that we're always going to be insurable to the end either. So look for carriers that give you the ability to make non-medical changes inside their contracts. And Avari is definitely a big player on that side. Take a look at them if you haven't been. All right, so now I'm going to flip over. So for those of you that 22 years at Manulife. In the past, life and living benefits wholesaler, mutual fund branch manager in 5 provinces across the country. So I spent a little time on the Manulife product suite. Manulife would arguably be one of the largest consolidators of insurance companies in the industry. And generally speaking, if you're looking for an old carrier's product and can't find it, it's likely at Manulife. I think they've picked up about, Dennis is showing me a sign right now, 26 carriers in the last 20 years. So definitely a huge player in the marketplace, and they have some very, very interesting product. They just recently came out with the Manulife Universal Life, so Manulife UL. It's level cost of insurance. It's yearly renewable term based inside that contract. They have options for pick your own investments, and they also have an option where you can let their money managers manage a portfolio that's exactly the same as their par contract if you don't want to do any money management in that. They just recently, after many years of holding out, came back out with a par whole life contract. For many years, they were offering the Performax Gold, the non-par contract, which had some benefits, there's no question. But when you take a look at the par contracts in the marketplace today, due to the regulatory changes and the capital that we're required to hold in order to provide the guarantees that are inherent in non-par whole life or level cost of insurance, the reserve requirements are much higher on the ULs. So from a client perspective, you can give them a lot more bang for their buck from a premium perspective using the whole life contracts out there. Whole life actually provides less guarantees as far as all of the options inside the contracts than what the ULs do, and therefore they do not need to have as many reserves. And as we all know, in this low interest rate environment, a dollar of reserve sitting there is not earning anything for the carriers, so that ends up being a very expensive option. So when you take a look at it, the industry has completely flip-flopped from looking at universal life contracts going back 15 plus years. Most of our larger sales these days are certainly on the whole life side. So Manulife is one of the longest running and best partial conversion programs in the industry. This started about 19 years ago, and I've been basically saying every day for the last 19 years it's going to end at any point in time. For those of you that have any Manulife on the books, if you're not aware of the partial conversion program or how it works, talk to your wholesalers. This is by far the best partial conversion program out there. It was the first. Equitable is the only other one out there that even offers anything close. Basically, with Manulife's partial conversion program, if you can run a new quote on current software utilizing the entire face amount that the client has, if you can run a valid quote, it's likely a valid partial conversion. Manulife is only paying you term insurance. So the term insurance is being no medical evidence. The client could be completely uninsurable, but they're getting current rates at attained age on the term insurance. And in that particular situation, on those partial conversions, Manulife's only paying you, the advisor, on the permanent portion. They're not paying you for the term rider. So the reinsurers recently did a complete review of that block. And because they're not paying advisors any comp on the term insurance, they're actually making money on that block. So while I've been saying for the last 19 years that the program could end at any time, it's actually a very profitable block of business for Manulife, and I don't see the program changing anytime soon. Manulife has even gotten to the point that while this is currently an administrative exception, they've put in the current term plans that this partial conversion program exists and will be available for clients to utilize until such time as Manulife changes it. So Manulife will make the comment that it's contractual because it is in the contracts. That is true, but what the clause says in the contracts is that Manulife can change it at any time. The long and the short of it is, as long as the block continues to be profitable for Manulife, that program will continue. So when I'm looking at my term plans that for larger face amounts in business situations, Manulife would be my number one choice from a term perspective, simply due to flexibility because of the partial conversion. Canada Life would be number two, and then the other carriers in question would be Equitable, SSQ, Avari, and BMO. And it all has to do with the flexibility on what you can convert to. So if you have a completely uninsurable individual, say a business owner, he needs another 10 years of coverage, he's coming up to renewal. All of those carriers that I just mentioned have a YRTUL that you can flip to, and they have a minimum premium that you can pay. It's not a artificial level cost of insurance premium. So we're not going to get into the rest of that today. That's a whole other presentation that Dennis and I have done, but we can talk about it at some point in time. So on those larger face amount cases where you need flexibility, Manulife Canada, Equitable, SSQ, Avari, and BMO who I'm recommending to take a look at. And it's funny, I made a note here at the beginning of our session that we really shouldn't be racing each other to the bottom of of the price grid on term insurance. When you take a look at it today, I mean, price is just one thing. You have to take a look at the administration support that your carrier is giving you, and it's not just about price. Most clients they very well understand that you generally get what you pay for these days. So if you're getting the absolute cheapest term insurance out there, it's going to come at a cost for you. So I would suggest to everybody that you just keep that in mind when you're deciding where you're placing your term insurance, and make sure that you're giving the business to carriers that are supporting you and yours. When you take a look at it, Manulife likely has one of the best child protection rider conversions in the industry. So for $2.50 a month, you get $10,000 of coverage. I'd like to see them raise the $10,000 of coverage a little bit. I think that is really too low, but that's what it is right now. But on marriage, birth of a child, legal adoption of a child, or age 25, you are allowed to convert that $10,000 of coverage to either $250,000 of life, permanent or term, and up to $100,000 of CI. So on the CI side, you only have to answer 2 questions to get $100,000 of CI issued. And that is basically, do you have 2.5 million of CI in place already? And the other question is, if the contract is issued, can you claim immediately? If you can answer no to those 2 questions, you can get 100,000 of CI, no other medical evidence. If you take the 100,000 of CI, then you get 150,000 of life. That's your option. Total number cannot exceed 250,000. So certainly in your mid-market, your family cases, take a look at their family term and the child protection rider. CI. Now, Manulife would have the highest early intervention payout out there. So these are the non-critical illness, but still pretty serious conditions. They're paying out 25% of the face amount, and the first payout does not come off the face amount. So if you have a $100,000 contract, you have an early intervention benefit, you're getting a $25,000 early intervention benefit payout, but your contract's still at $100,000. Some of the carriers out there actually take that amount off the face amount, so just watch that. And that generally is just all reflected in the premiums. Manulife is a built-in living care benefit, so it also acts as long-term care if you have a permanent contract. Something to take a look at. Long-term care in this country has been a very contentious issue. It's a very expensive product. Most of the carriers have gotten out of that marketplace over the years, Manulife included, but they have it built into their CI. Sun Life would be your only really long-term care player left. Blue Cross is a long-term care too if you're actually looking for that product. On the CI side, they've got T10, T20, T65, T75, T100, and a T100 15 pay. One thing to note is that all of the term plans, like their T10, T20, can switch to either a T65 or a T75. In some cases, you can go to permanent, T100, all within a certain number of parameters, some of it being age. So all of your term CI illustrations, when you print them off, if you read the whole illustration, it'll tell you and your client what your switch options are. So again, as I said earlier in this call, take a look and get the proper face amount of coverage in place on your clients at a younger age when they are still insurable. Worry about paying for it later. You can switch T10 to T20 in the first 5 years. That term 20 can then be switched to something else longer term. And you can add return of premium either at expiry or early surrender after 15 years without medical evidence. So it's the best deal in the CI industry. Many of the other carriers offer that too. So make sure that wherever you're putting your CI business, you do have those switch options. On the DI side, Manulife, it's the old Aetna product. It's a great contract. ProGuard would likely be arguably the best contract in the industry. And it includes a non-occupation clause, a very rich partial on ProGuard, and very strong catastrophic disability riders in there. So they have 2 products, ProGuard and Venture. Venture's more your gray collar, blue collar. ProGuard's your white collar. Take a look at those contracts if you're looking for DI. They have return of premium, and they're very well written contracts for your professionals. And they're very strong in the professional market, the 4S occupation class. So if you're looking for $7,500 a month of benefit, doesn't actually matter what the individual does. They are a 4S classification just based on income. So have a look at them. Manulife has a very strong field support structure. They've likely got some of the largest numbers of wholesalers in the field. So whoever that it is that you're dealing with, reach out to them and let them help you. They are very good. Many of them have very, very long track records with Manulife and have been there many years and can help you with that particular product. So next up, I'm going to talk a little bit about RBC Insurance. So very, very interesting company. They are seeing a lot of business right now in the term insurance market. They really only offer term insurance. You can't go in and apply for a permanent contract today. The only way to obtain a permanent contract from RBC is to convert one of their term plans. But it is a very, very competitive and customizable your term product. So you can pick any period of time. It's kind of like Industrial Alliance's pick a term. So if you want a 17-year term, you can buy a 17-year term. If you want a 28-year term, depending on your age, you can buy a 28-year term. So certainly something to take a look at. Those particular products, they also renew beyond that term to a yearly renewable term. So this is another thing that Manulife has done recently on their term insurance. So after your term, so let's say you bought a T10, when the contract renews, it changes, it flips to yearly renewable term. RBC does the same thing, so you can keep your coverage in place for a few years. So your term conversion is to universal life. They have no whole life product at this point in time. There's been some scuttlebutt on the street that RBC is looking at coming out with a whole life product in the near future. We haven't seen anything from them yet at this point in time, but that is some of the rumors that we have heard on the street. So it'll be interesting to see when you take a look at their level cost of insurance options that are available on the term conversions. They really have not repriced those products in the recent past like all of the other carriers have as the interest rates have fallen. So really, from a price perspective, their term conversions to level COI is very well priced for the age versus the market. One of the things that I'd like them to see is a yearly renewable term option for those business cases, so that if I only needed coverage for another 5, 6, 7 years, that I could switch it to a YRT-UL. That's the one thing where RBC is short right now, and why they're not part of my 6 recommended term plans at this point. On the DI side, RBC has likely the largest block of DI in the country right now. They have a great grad DI program for young professionals coming out of school. Definitely need to take a look at them if you are working in that particular marketplace. On their DI side, they have everything from professional to blue collar. They have solutions for all occupations, and they have an accident-only plan as well. They have a very good CI product portfolio too. So if you have a situation where you want to keep it all at one carrier, they've got life, DI, CI. You can do it all inside RBC if you wish. All right. I'm going to hand it off now to Dennis. Dennis is going to talk a little bit about SSQ, another one of our Quebec-based carriers.
Well, we're heading down the home stretch now. Only 2 companies to go. But Mark, I don't know if you realize there's at least one broker that enjoyed our presentation today, because one broker hopped in their car, drove down to my office, held a sign outside my office door offering to take us to lunch today. So, with a big sign too. So thank you, Christina, for that. So SSQ, as Mark said, one of our upcoming Quebec companies who we've been dealing with for a while, and they've become a very aggressive underwriting company. We've had some very good decisions from them in the last couple of years, especially with type 2 diabetics and sleep apnea. Those are two particular situations that we always wrestle with where to put those, and usually it results in a rating. I mean, usually type 2 diabetics, you're looking at 150 to 200, very well controlled. We've gotten type 2 diabetics standard with with SSQ, and we've got sleep apnea standard with SSQ. So if you have clients in those areas that are controlled, take a look at SSQ. Okay, like I said, we've got some good decisions there. They have a whole life plan, and they have a UL that has level and wire T on it. Did I not move to SSQ? I apologize. I must probably want to stick on RBC for a minute. So they have some unique, some niche products that are unique to the industry. They're flexible. Their UL has wire T, and it has some of the most competitive rates in the industry. So if you're looking at a UL wire T, you should definitely give them a look. Their Term Plus, that's their flagship product. That's what they sell. It's a multi-purpose product offering life insurance, CI and DI, similar to Manu's Synergy, but very well priced and everything. They have a good selection of CI products, and they have a very short and concise application. Now, we've recently have a new wholesaler with SSQ, Sam Alves, and for the Grand River brokers out there listening, Sam is coming to present to our Grand River Wednesday tomorrow, and the meeting starts at 9:15 at the Cambridge Chamber of Commerce. So those of you that are available, we invite you to come to that. So SSQ, very good company. Like I said, we've had some good underwriting market, but we're using them very well. So Mark's going to wrap up here with Sun Life, and then we'll take some questions.
Sun Life. So likely the widest whole life suite for estate and wealth protection of all the carriers out there in the marketplace. They have an 8-pay, a 10-pay, a 15-pay, 20-pay. You can do enhanced or paid-up insurance units on the gross side. They are definitely a player on the whole life side. They're very much in the large case market. Their whole life par, I mean, they would argue they have huge advantages inside their par account. They have a lot of it essentially amounts to private financing, private debt in the industry or in various countries around the world, and that's really helping their par account. They would have arguably the best child CI in the marketplace, and the reason I say that is because you've got a guaranteed contract switch to an adult plan. So the day you buy the child juvenile CI plan, you know what their adult plan is going to be. So your other main carrier on child CI in the marketplace would be Canada Life. With Canada Life, what the contract allows you to switch to is whatever's available in the marketplace as offered by Canada Life at that point in time, and that could be 25 years down the road. So as we all know, with medical advancements, the definitions are changing over time. I personally have a CI contract from 15 years ago, and it is much, much easier to claim on than what is available in the marketplace today. So when you're looking at child CI, the fact that you know exactly what the adult plan is that you're switching to at age 25 with the Sun Life contract, that certainly has a lot of value to it. So from a child CI perspective, you're going to be looking at Sun. On that particular child CI plan as well, they have a very advanced ROP design, so the parent can pay for it for a whole bunch of years, get all of their money back, and then they can switch it to the child who's now an adult, and the young adult can pay for it for the rest of their life and still have a return of premium as well. So it's really a two payout return of premium rider, something to take a look at for those cases. On the UL side, single lives, they're looking at the larger face amounts, older ages. Single lives, joint last to die, they're definitely an estate planning marketplace player. When you take a look at it, if you've seen one of the Sun Life presentations recently, I think they did 50 contracts that were over $5 million of premium last year. I mean, again, a very large case player. Writing side, requirements on the larger cases I have talked about. I mean, you really requirements are when you're underwriting these larger cases. Some carriers are much easier to satisfy their medical requirements than others. I mean, if you can get away without having to do a stress treadmill, ECG, then I would certainly recommend avoiding that if you can, because you never know. If the client's never done one before in the past, that's not the time and place in your medical underwriting for your life insurance that you want to find out that you might have a little hiccup in your heart. So take a look at those medical requirements. We certainly preach that from our perspective. Some of the carriers out there are much easier to do business with from the standpoint of what requirements they want. And, just keep that in mind. Not all clients love to give blood and urine samples anymore. So there's a lot of carriers out there now that you can get options and get properly priced term insurance in place for them. So take a look at that. So that pretty much wraps up the Sun Life side. I think at this point in time, we're going to take questions. So there's been a chat feature as part of the Skype program, and I think the ladies have been taking some questions as we've been talking along, as all of our listeners have been thinking about them as we went through the various carriers. So they're going to unmute themselves now, and they will maybe take some of the questions.
Okay, this is one question. Do you find that Canada Life underwriting department is improving their speed of response, or are they still facing challenges with time delays?
Okay, so somewhat of a loaded question, as we all know. I mean, every case is case specific. My general feeling for Canada Life is that they have greatly improved their service turnarounds. We still have hiccups every once in a while. That happens with every carrier. No two life insurance cases are ever the same. Every one is unique, and as our clients. So, but generally speaking, I mean, in talking to the advisors that I work with, we're having some very good underwriting results coming out of Canada Life, and the time frames are quite reasonable. We're really not seeing, like, it's definitely an improvement over new business now and all of that. So they've definitely gone through some changes. I mean, even the company as a whole, I mean, the companies are downsizing in many ways these days. So the service that we may have gotten in the past may not always be the case. But on larger cases, they're definitely looking after the agents and the clients. The large, and when new business now changes, because they were getting, there's no question there on that side.
They're coming in tomorrow. We'll ask them that question.
Yes. Yeah, they're coming into our Grand River meeting tomorrow, so we can ask them that question then too.
Okay, that's the only question that we have.
It's the only question? All right. Well, hopefully this has been somewhat useful for everybody out there. I mean, not every carrier out there is the best in everything, but they all certainly do have their niches. And in working with all of the carriers now, having spent 22 years with one carrier, my life is a lot simpler now than what it was then. If I have a situation that just did not fit for the carrier in question, I can go and take it to the other carriers that are actually looking for that business. So we're very fortunate that way. So I'm going to hand this off to Dennis. He can provide a few closing remarks, and if there's no other questions, then we would like to thank everybody for joining us this morning.
Yes, in closing, I'd just like to put in a plug for our pre-writing assessment form, which I will send to Cassie and Jakey along with the companies that do pre-writing assessments so they can send it out to you. I would highly recommend, especially for you newer brokers, to do this, use this. This form is one page. It's like a mini application. It has all the basic questions that are on a regular application. But even before you write a case, I suggest that you put it in front of a client and say, is there anything here we need to talk about? Have them go through the form, and if there is, then check it out further, because we're getting too many cases that brokers are sending in, and halfway through the process, something's coming up that they didn't know about. So you don't want that to happen. Since we've been using this, it's especially for newer brokers, it's really helped. So Mark and I have put together a field underwriting meeting that we've presented, and we might do that at a future webinar. And also, I did my newer business broker kit last year. We'll probably do that again sometime this year as well. So all kinds of Bridgeforce things that we're working on geared specifically to Bridgeforce brokers, because we want you to feel comfortable dealing with Bridgeforce. We want everybody kind of be on the same page with Bridgeforce. That's why we have our Bridgeforce meetings in the spring and the fall, and we encourage you to attend those. Our last ones are going to be here in the fall, and we encourage you to attend one of those. So this has been good today. We hope you've enjoyed it. We hope it's been beneficial. We hope it's, so we're going to send you a copy of the presentation, put it with your kit, have it as a reference so that in the future, if you need some help, and Mark and I could, if you have questions, we'll make our emails available to you. We'll be glad to help you out. So have a good summer, and join us at our next webinar. Raptors, bye.